Hi, welcome back to the Invest in Value channel. My name is Victor, and in this video, I'll be evaluating Whirlpool, stock symbol WHR. Before I do that, do me a big favor, hit that like button, consider also subscribing to my channel, and click that bell if you want to have notifications on new videos that I release. Now, let's talk about Whirlpool. So Whirlpool, if you haven't heard of them, they're a big appliance company, and they're probably in your house right now. They've been around for a long time, and most recently have really had a great year in 2021, had a brutal year in 2020 with COVID, and they are a very good value play where their stock price has been beaten down. But the company has been very profitable and expects to be very profitable in 2022. They pay a great dividend, and therefore I decided to invest in Whirlpool recently in the last 30 days. I think it really provides diversification for my portfolio, and it gives me a dividend in 2022. I'm not expecting 2022 to be like 2021 or 2020, where you had just great appreciation of stock prices. I think this year is going to be very volatile, a lot of ups, a lot of downs, probably more downs than ups. And I can't tell you if the S&P is going to be positive this year. I think to this point, year to date, it is negative. And it's going to have a company like Whirlpool that's going to give me a little more stability and kind of counterbalance some of those growth stocks that I have, some of those software companies, some of those fintech companies that I have and love. It's good to have some of, a company like Whirlpool in my portfolio to stabilize my portfolio. Now let's get into where the stock price has been trading over the last year and over the last 5 years. So Whirlpool over the last year has really had its price really come down. It was riding a pretty good high in 2021 because so many people were buying their appliances. My personal experience in trying to buy appliances with my wife, we would go to Home Depot or Lowe's, and they'd be sold out just about of everything. It just felt like, you just had to take whatever they had in inventory with regard to appliances. So I think that strong demand following a year of COVID, where you had shutdowns, production, disruptions, supply chain disruptions, all of the above, just really created an environment where there was excess demand for appliances. But that really, the concerns have existed or have arisen where they think there's going to be less demand for 2022 and going forward. So the stock price, really reflects that. I'm not a complete buyer that, hey, demand for appliances is completely going to exit. I think demand will, moderate, but it's still going to be good. And I think Whirlpool is very well run. They're going to continue to be profitable. They're going to pay that big dividend. So I'm really liking Whirlpool as an investment. So the last year, they're down 25%. If we look at, the 5-year chart, pre-COVID, they were trading pretty much in the mid, 150 range, 140 range, and then COVID hit, and then they rose. Man, their high was 246. So they really rode a real nice, upward trend, and have more recently really faded. But I think it's a really good buy. They have a very low price earnings ratio of 6.23. Pay a dividend of 4%. The market cap is 10 billion, which is not that high. And their trading range is 169 to 257. So you'd be buying the stock toward the lower end of that trading range. Okay, now let's take a look and see what I think this company is worth. I put Whirlpool into my value calculator, and here's what I came up with. First, I wanted to point out that if you just valued this stock based on its dividend, it'd give you a pretty high value of the stock. It calculates for me at $166 per share, pretty much close to the 175 price that it's currently trading at. But I tend to use really discounting of free cash flows to determine the intrinsic value of a company. And here's what I came up with when I really discount their free cash flows. So first, I'm using a discount rate of 7%. Whirlpool's a real solid company. As I, will mention a little later, their balance sheet's just really strong. It's a brand that's really in place with all the major retailers. It's just a good company. So 7% is a very good discount rate. Their free cash flows have been growing quite well, 30% over the last 5 years. That's phenomenal. That's great to see that they're profitable, generating free cash flow, and returning it to shareholders in the form of dividends. Their revenue over the last 5 years has only grown 1%, but as just last year they grew at 13%. So the most recent year looks great. You have a COVID year mixed in here, which really affected them, but overall it's been a very stable company. So I'm going to use a growth rate of the next 5 years of 8%, and then long term of 4%. Keep in mind, this is growth of free cash flows, not necessarily just revenue. So I'm really looking at the growth in free cash flows over the next 5 years and then long term. The most recently closed year, which was 2021 for them, they had free cash flows of 1.651 billion. Great year, good cash flows, and they're guiding for just about the same amount in 2022. So I put that into my model, and I come up with an intrinsic value for the whole company of 21.5 billion. They currently have a market cap of just 10.24 billion. So it leaves a lot of room for value here. Like determination of intrinsic value per share is $367 of value per share, but they're only trading at $175 per share. So it leaves really this stock price is discounted by 110%. So this is a good opportunity for a value investor. All right, let me summarize Whirlpool now. First, their last year performance was excellent at 13% revenue growth, and also their free cash flow just grew tremendously. So that was great to see. Again, last 5 years growth is 1%. Mixed in there is that COVID year. I tend to really look at the last couple of years and really look at what's going on with the economy and factor that into my analysis. I appreciate other channels, and other channels tend to look at just strictly 5-10 years growth rate. I think that might be too many years, because what was going on 5 years ago may not be going on today, and especially after beyond 5 years of history. I think that's kind of old school, where the economy was very stable and predictable. But I happen to think that the economy is far more dynamic. It's globally connected. It's really changing quickly. So I'd rather really see what the company's doing more recently, last year, last couple of years, understand their guidance, and really make my decisions along the most current information that I've got available on a company. Their free cash flow was $131 million, 32% growth rate over 5 years. That's phenomenal. Their cash balance is $3 billion. If you measure that against their market cap, it's 30% of their market cap. They can pay off 20% of their total liabilities immediately with that cash, and overall they can pay all their liabilities over the course of 6 years. So I believe their balance sheet's really rock solid. The guidance the management provided for 2022 is that they're going to grow 5 to 6%. They also guided that they're going to provide $1.5 billion of free cash flow. I'd love to see that, and they're going to pay a dividend of 4%. I happen to think that management tends to be a little bit conservative when they provide guidance. So it'd be great to see Whirlpool surprise to the upside, which would help the stock price. The other thing on the guidance is, I think the stock market thinks that demand for appliances is going to really wane and really go down severely. I don't agree with that. I think that it's going to moderate, definitely, but the demand is going to persist. I think a lot of people postponed buying an appliance and just kind of hung on to their old appliance because buying it was so difficult in 2021. I think it's similar to the used car market and the new car market. They just can't make them fast enough. Therefore, the used car market is really out of whack because used cars are really expensive right now. So that really provides the automakers a great opportunity to just produce and sell at a great price. I believe the same conditions will exist for Whirlpool, where the demand is there, and if they can produce, they'll have buyers of their products at a very good price. So therefore, my outlook for the next 5 years is that they grow free cash flows by 8%. Longer term, they'll grow free cash flows by 4%. Demand will remain for appliances. And what I really like about Whirlpool is my portfolio in 2021, 2020, it probably had some growth-oriented companies, some good growth-oriented companies that were profitable, but it was probably a little too growth-oriented. And I like bringing in companies like Whirlpool for 2022 to kind of defend against those downturns and those days when the S&P goes down 1%, those months when the S&P goes down 2 to 4%. Just year to date, the S&P is down more than 5%. So that's, I think Whirlpool gives me that diversification of a stable company, very, at this point, discounted stock price with a low market cap. So really there's greater potential for upside in a Whirlpool stock as opposed to buying a really expensive, high market cap company that can really tumble, like a PayPal. We saw that, tumble tremendously. I don't think that'll happen to Whirlpool. I think it'll be a good, stable dividend payer, and that's what I'm looking for. A little more of that in 2022. So what's my plan for Whirlpool in 2022? Like all my stocks, I watch them. I probably review them at least once a month. And once their earnings hit, I really analyze the company, from top to bottom, make sure that they're performing well. And what's important to me is that the business plan that the company is committed to, that they stay on that plan, they stay on that course, because I'm buying into that plan. And if that's the case, they perform well, they stick to the plan, I continue to buy shares. If they change the plan and I don't like the plan, I exit the position. Or if they underperform, under execute, it shows that, hey, these guys, they just can't make it happen. So I exit the position as well. I'm going to keep track of the economy and see how the economy for appliances and home improvement and durable goods and so forth are going. That does have an effect, because you have to respect the fact that, hey, where's the economy at? What are people buying and not buying? Again, I think I'm optimistic that this year the appliance market's going to be good. 2023, the appliance market's going to be good, but that could change, and I could get information that changes that perspective for me. So I'll be monitoring that as well. So just a quick reminder that I make these videos and they're really for entertainment purposes only. I share my point of view on a stock and the reasons why I invested. I go through the intrinsic value calculations that I have and my whole perspective on a stock for entertainment reasons only. Please weigh your investment decisions seriously and consult a professional if needed. But I want to wish you the best success in your investments going forward. So big thank you for you for watching this video. I'm going to ask you a giant favor again, which is if you could please like my video. I appreciate that. Please consider subscribing and hit that bell to get notifications when I release new videos. Thank you for watching.